Hello everybody, this is again a new part of business taxation. We are still in Chapter 1, Corporation Tax Basics. Now let's talk about donations to so-called charity organizations. Well, here you see we are still at the beginning, at the very beginning, and we are still talking about the tax base. Okay, so first, when we have to talk about donations to charity organizations. Remember, in income tax, we also had that topic somewhere. And under the Income Tax Act, donations to so-called charitable organizations or charity organizations are deductible as special expenses, in German Sonderausgaben, or better translation, but not literal translation, would be special personal allowances. So you can deduct donations, let's say to the Red Cross or to another organization like that, from your tax base, not from the tax base. But the term charity organization is here used in a very wide sense. So not only charity is privileged, but some other organizations too. Charity organizations is only the name because that's the most important example for organizations of that category, which is privileged. So Red Cross, welfare organizations for the poor or similar organizations are the most important ones, but also other organizations which serve the public benefit, like organizations supporting academic or scientific research, healthcare organizations, but also religious organizations can claim charity status. Usually then they have to be run as non-profit organizations. That one is one of the conditions. And there is a list of purposes which can allow recognition as charity organization under German tax rules. And that list, together with the conditions which such an organization must fulfill concerning its statutes, its real and actual behavior, and so on. All that can be found in the General Tax Code, the Abgabenordnung, in paragraphs 52 and the 4 following ones, because that status charity organization has an importance for more than one tax act. So the conditions and the definition what a charity organization is or can be has been outsourced and laid down once and for all in the General Tax Code, because the Abgabenordnung, the German name for General Tax Code, contains many rules which apply for all taxes as long as the individual tax law does not contain special deviating rules from these general rules. Well, now, as you also, I hope at least, remember, in income tax law, the deductibility of such donations is limited. Imagine what it would mean for the fisc if, in a fit of, how is it called? If you, in a fit of non-egoism, selflessness, everybody begins to donate 99% of all his or her income to charity organizations. First would be great. But then, if you think about the state would have nearly no tax base left over. So the financing of state organizations which nobody wants to make donations to, for example, the army and the fiscal offices and the police, the financing of these institutions would no longer be safe. So you need to set a limit to the generosity of people. Rather surprising. Naturally, the limit should be a generous one. It's naturally something which is very positive from the state perspective. If people give away 100 euro completely or 100,000 euro completely for charity purposes, because the charity organizations use this money in a way which benefits the public. And so if somebody is willing to give 100,000 euro completely away, from the perspective of the public, that is to a certain way far better than just to take 50% of these 100,000 as taxes. The limit, so, is only required to make sure that a bit is left over as tax base for the state. So in Germany, the limit is you can offset up to 20% of your income against donations, or donations against 20% of your income. If you donate, let's say, 25% of your income, you can only deduct these 20%. But there is a second limit. You can always, if you are the owner of a business, you can always deduct at least 4 per 1,000 of the total of all the wages which you have paid during the year and all the revenue from sales which you made during the year. This limit counts only if it's higher than the 20% of the income rule. So, for example, if you suffered losses or something like that, or if you had losses in the second part of the year, so your income dropped down considerably, then at least you can always deduct the 4 per mil of wages plus revenue. The explanation is that people are probably reluctant to make donations if they are not sure if they can offset it against the tax base. And so in the first half of a year, or even in the first 10 months of a year, people would probably not be willing to make donations yet, because they don't know how much they can, with tax effect, deduct this year. And so to give them a certain guarantee, there is a certain amount which can never become lower during the year. The wages which you paid in general from January to March can not become lower in the rest of the year again. And also the revenue from sales cannot drop down again. So in March, an accountant can tell his or her boss already, boss, up to 4% of all the wages we paid in January and March, and of all the revenue from sales which we made between January and March, 4 per mil of that amount is already an amount which we can, under all circumstances, deduct from tax base. So you can already donate such an amount without having to fear that the deductibility is in danger. And that is the function of that second limit. Good. All this has lost a bit of its importance because a few years ago, an additional rule has been introduced for donations which are higher than the limit. So which you can't deduct this year from the tax base. These surplus of donations, this exceeding amount, can be shifted to the future, and you can try to offset it then in future years within the limits of that future year. So together with the donations in the future, you can also deduct the exceeding amount of previous years, but again, the deduction is limited to 20% of the income in that future year, or 4 per mil of wages and revenue from sales. Good. That was the situation in the income tax. Now in corporation tax in Germany, the rules are, surprise, exactly the same. You can deduct donations which you made to acknowledged charity organizations up to a limit of 20% of the income of the corporation, or if you have a business, also, if higher, up to 4 per mil of the total of wages paid plus revenue obtained from sales. So exactly the same. And again, there is a donations carry forward for all the donations which exceed the limit, so which were kept by the limit. You can shift them to future years, and it try to deduct them there within the limits. That is something which you can find in paragraph 1, number 2 KSTG. Now, how does one have to deal with that thing in cases? Well, the problem is the limit is 20% of your income, and when you solve a case, you don't know yet your taxable income. You are on the way to compute it, so when you decide about the deductibility of the donations, you must know how high your income will be, and you can't find out that without knowing how much donations are deductible. So that seems like a logical impossibility. Now, well, life's easy. Because the technical solution is what everybody does is you just take a two-step approach. First, when you look through all the events under commercial law and check them if their treatment can remain the same under tax law, and you come to donations, then you just say, oh, I don't know yet if donations are deductible at all. If I'm finished, it might come out that the income is zero because of losses or so, which perhaps come in event number 218. So I just try to be on the safe side. First, I regard all the donations as temporarily not deductible, and so I cancel the donations expense completely in the first step. So I add them back to the taxable income. Then, when I'm through with everything, so have checked all the events, then I know the taxable income. Then only one position remains to correct: deductibility of donations. And then, indeed, when you have that taxable income, you can easily compute the 20% limit. And by the way, when it comes to that 20% rule, the law really means only in that context with 20% of the income before deduction of the donations. So when you arrive at that point, you can easily draw a subtotal, say this is a provisory taxable income, compute 20% of that, and that is your limit for deductibility of donations. The important thing is both steps need always to be done. First, revert everything, later make the calculation, because even if you think, well, the income is so high, that will work under all circumstances. Or you say 4 per mil already permit deduction of 20,000, I only add back the rest. No, that leads to confusion. Just first revert all the deductions, cancel them for donations, and later in the last step do the donations calculation. That is the only thing which really works. Good. So naturally, as in the last videos too, nothing is good without a case. So here's a case where we can practice what we have learned. Die Schönert AG Kleve has a commercial profit for the accounting year of 290,400. During its computation, the following events have had an influence. Corporation tax has been paid, trade tax has been paid, donations to the Red Cross were made, donations to university were made, 60,000, donations to 2 political parties, so not really a bribe, one would not admit that, but probably the enterprise sees that as a supporting democratic culture and establishing probably good relations to other people. The supervisory board members got a remuneration of 100,000 and dividends were received from a foreign participation, 80%, 100,000. Dinner expense, 5,000, and you sold some shares in another company, 20,000, and that is the case. The question now is what happens, ladies and gentlemen. That is what we have to find out now with a solution. Yeah, and again, let's begin at the beginning. Personal tax liability, you know, taxation is very often routine work. So Schönert AG is juridical person. So KSTG applies. It has seat in Kleve, so unlimited tax liability under 1, and the number, if you look it up, will be number 1. Because it's an Aktiengesellschaft, an AG, a stock corporation, and that means it's taxable under number 1. That has a role later when we have to decide if the 8.2 rule applies, so that everything is income for business. Now, the tax base or the objective tax liability, so checking the events. You know, here is a general introduction which is possible. The income has to be determined according to ESTG and KSTG rules. See paragraph 7.1, 7.2 and 8.1 KSTG. As the AG is taxable under 1.1 number 1 KSTG, all income is deemed to be income from business. See paragraph 8.2 KSTG. So the tax base for everything is the profit to number 1. ESTG tells you that. It's to be determined by balance sheet and bookkeeping 4.1 ESTG, because that's the rule. If one has to keep books, and an AG and a GmbH have to keep books, ladies and gentlemen, there's no doubt about that. So the balance sheet has to be based, this has to be based on the commercial accounting. Deviations are only possible where tax law allows or even demands it. See paragraph 5.1 ESTG. So the commercial profit of 290,400 euro is the starting point for the computation of the tax profit or the profit from business. Yeah, now let's check the events. 2.1 corporation tax paid is not deductible. If you remember that, 10 number 2 KSTG. So 0 is deductible until now. We had booked 60,000 expense correction plus 60,000. You remember in the commercial accounting, we booked the corporation tax payment naturally as expense. The money went away without getting something in return, so it was expense. Trade tax payment, not deductible under 4.5b ESTG. You perhaps ask yourself why this is now in the ESTG, whereas the corporation tax undeductibility is regulated in the KSTG. The answer is KSTG contains those rules which can only affect corporations. Trade tax is a tax which can be levied by all legal forms, so it is a rule which is mentioned in the ESTG. Whereas corporation tax payments is a problem which can only happen in case of a corporation. So this specific rule therefore only shows up in the corporation tax act. Yeah? Not deductible under paragraph 4 until now, booked as minus 58,000. So adjustment or correction which is needed is plus 58,000. Number 3, donations to Red Cross and donations to university are deductible under paragraph 9 number 2 KSTG, but only to or up to a limit of 20% of the income, this can not yet be computed. So temporarily complete reversal of the deduction by plus 92,000. 2.4 donations to a political party. Now, surprise, political party are no charity organizations, not deductible at all. Paragraph 4.6 ESDG. So the expense booking which you had in the commercial law, 20,000 adjustment, 2.5 supervisory board remunerations, only deductible at 50%, so only minus 50 instead of minus 100,000 are deductible. And that was in paragraph 10, number 4 KSTG. By the way, if in a case solution you would just mention the figures, that would give you no point at all, probably, because any statement which you may make on the legal situation is completely worthless if you don't give the proofs. What people want to see in a case solution is that you know the rules, not that you know the mathematics and can add up the figures. So 2.5, that's dealt with. Now we have 2.6, the dividend received. It's tax-free under paragraph 8b1 KSTG. So 0 taxable. Until now was booked naturally plus 100,000. So correction, minus 100,000. This automatically has a B aspect treatment of the expense. 5% of 100,000, that is minus 150,000, are treated as non-deductible expense. Paragraph 8b5 KSDG. So minus 5,000 have to be cancelled by adjustment of plus or adding plus 5,000 to the expense again. 2.7. Okay, let's take a new page. That might be helpful. 2.7. Dinner expense. Only deductible at 7% or are 70% of the adequate amount. That was 4.5. Number 2, at least I hope so, ESDG. So deductible only is an amount of 3.5 thousand euro. And until now, minus 5,000 were booked. The correction is adding 1,500. 2.8 gain from selling the share is always tax-free under paragraph 8b5. 8b2 KSDG. So taxable is an amount of 0 until now booked in commercial law plus 20,000. So the necessary correction of the commercial law entry is minus 20,000 just to cancel the plus 20,000. We have again a 5% lump sum for non-deductible expense. You remember that from the last video. This is the non-deductible expense for the time during which you held the shares. Here that's Well, 1%, no. Oh my God. Let's compare. 10% would be 20,000, would be 2,000, and half of it is 1,000 euro. And these 5% are in 8B3. Now, what comes out? Probably chaos, ladies and gentlemen. Number 3, adding it all up and computing the tax. So, starting value, 290,400. Then, on top comes number 1, plus 60,000. You see that I always add the sign in front of it, so that I never make mistakes concerning the question if I had to subtract or to add things. Plus the 60,000, sorry, that was, we summed that, took that together. Number 4 was the political parties, 20,000. Number 5 were the supervisory board members, 50,000 were added. Number 6 were the dividends, minus 100,000. Number, oh, it was number 6. And also number 6 was plus 5,000 expense. Because of number 7, we have the dinner expense plus 1,500 correction. Number 8 is the gain from selling minus 20,000. And 8B was plus 1,000. Now that needs some time and a calculator, ladies and gentlemen. That seems to be plain and clear. Okay, now we have that subtotal here. That's the provisory income before donations. And now, ladies and gentlemen, we were so happy that we have the subtotal that very often you will now forget to deduct the donations. So donations limit 20% of the income. That is here. 20% of 457,900. That is 91,580. Donations which were made, 92,000. Surprising. Because Red Cross and university qualify for charity organizations, political parties don't. So deductible is an amount of the 4 per mil threshold cannot be determined here. Assumption it is lower. That's usually the case. I admit that was carelessness from my side. I should have given the data for that too. So new subtotal or new total is 457,900 minus I. And so we have 366,320. Tax 15%. That is paragraph 23(1) KSDG. So we have, let me calculate that, 54,948 euro corporation tax. Prepaid was 60,000. So clear thing. The total liability which we still have is a refund claim of 5,052. So, end of case, ladies and gentlemen. So that shows you how a bit longer cases can be done. Thanks. And now this is sufficient for today's video. I thank you very much for watching. And I look forward to see you soon back again. Have a good day. Enjoy the time till the next video comes, and don't forget to repeat from time to time the things which you have already learned up to now. Okay, till later. Ciao.